Assalamualaikum warahmatullahi wabarakatuh. My name is Amirul Hanif bin Muhammad Sahari. Today, I would like to present what is MFRS 8 operating segment. So basically, segment report is the financial reporting standard that requires listed company to disclose information about the different part of their business. A segment is essentially a component of the company that engage in the business activity from which it earn revenue and also incur expense. This activity must be regularly reviewed by the Chief Operating Decision Maker, often referred to as the CODM, who use this information to allocate resource and access performance. For a segment to be reportable, discrete financial information must be also available. Under management approach, segment reporting must align with internal report used by management. This means the way to the business is structured and analyzed internally is the same way it should be presented to investors and regulators externally. Overall, segment reporting help provide a clear picture of how different parts of company contribute to its overall performance.
Moving on to the next one, which is Chief of Decision Making. So what is the Chief of Decision Making? The Chief Operating Decision Maker is a term used in MFRS 8 operating segments. It is a function and not necessarily a person, which refers to the individual or group of individuals responsible for allocating resources and assessing the performance of an entity's operating segments. This role embodies the highest level of leadership within the organization, tasked with assessing overall performance, identifying strengths and weaknesses, and guiding strategic decisions to shape the organization's future direction and ensure long-term success. First and foremost, guide the bank's overall decision-making structure to ensure choices are based on data, follow Sharia principles, and support Bank Islam's strategic direction. This role ensures to help the organization make well-informed and focused choices. Second, the key responsibility is ensuring that every major decision complies with Sharia requirements. This means checking that all actions follow Islamic principles. Next, report to and advise the board on governance matters, policy recommendations, and areas requiring board approval. This will ensuring the board stays informed. Last but not least, Sharia compliance, which is regulatory requirements, that this will actually ensuring informed and responsible decision making. Firstly, implementing board strategy and policies so that it will be able to translate the high-level direction set by the board of directors into operational activities across the organization. Secondly, responsible for overseeing and guiding the performance of all business units, subsidiaries, and airport operations under MAHP, ensuring strategic objectives are met with organization goals. For report to and advise the board on is identifying and evaluating issues or developments that significantly influence the company's overall performance, including major strategic opportunities that could shape the long-term growth and success. Another one is monitoring underperforming businesses or activities, analyzing the root causes to improve performance and achieve organizational targets. Next, we will proceed with the types of segmental reports. There are two types of reports, which is business segment and geographical segment. Business segment is a part of a company whose financial performance is separately monitored and managed by CODM for the decision-making purposes, while geographical segment presents financial information by location, such as country, region, or economic environment. Bank Islam segment reporting follows the structure used by their Group Management Executive Committee. They report three main segments, which is the first one is Group Retail Banking, which serves individual customers and SMEs with products like financing and deposits. Second one is Group Institutional Banking, which provides financing, trade, treasury, and investment banking services to commercial and corporate clients. Third, Head Office and others, which includes the Head Office smaller business units that are not significant enough for a separate disclosure of, which is all result based on their internal management reports, and the transfer pricing will be allocated accordingly. Next, moving on to the Malaysia airports that is organized by both geographical and business segments. In Malaysia, airport operations include managing and maintaining Kuala Lumpur International Airport Terminals 1 and 2, along with providing airport-related services and operating duty-free, non-duty-free, and F&B outlets. Non-airport operations cover project and repair maintenance, facilities management, technical services, and hotel management under the Sama-Sama brand. Overseas airport operations include managing Istanbul Sabiha, Cochin International Airport in Turkey, while non-airport operations provide facilities management in Qatar. Meanwhile, for Bank Islam, it only focuses on business segments such as Group Retail Banking, Group Institutional Banking, Head Office, and others. In short, business segments show what the business does mean, while geographical shows where the business operates. With that being said, both of these segments help users to comprehend and understand how each part of the business contributes to overall performance. As you can see from the table, for Malaysia airports, annual reports are airport operations and non-airport operations. This helps users to see how each business area contributes to Malaysia airports' overall revenue and profit. For the geographical segment, Malaysia airports operates in Malaysia and also in overseas, so that it reports how actually each region performs separately.
The key benefits of segmental reporting for financial users. Firstly, detailed performance analysis. Segmental reporting provides a detailed look into the different parts of a diversified business that is not available from consolidated financials alone. This allows users to dissect the consolidated figures to see where value is truly being generated. If we look at the total net income breakdown, while the consolidated total net income is 2.5 billion ringgit, the report reveals a significant disparity between segments. Group retail banking contributes around 1.7 billion ringgit, which is approximately 68% of the total income, and group institutional banking contributes 0.8 billion, approximately 32% of the total. Secondly, enhanced risk assessment. Investors can better assess the specific risks and return associated with different business areas, which is crucial for a large and diversified company. Users can evaluate specific risks like credit risk associated with distinct segments. Now, if we look at impairment allowances, the net allowance for impairment reveals that the retail segment bears a significantly higher impairment cost than the institutional segment. This disparity helps investors understand which part of the business is more exposed to potential loan defaults or asset value reduction.
Next, what is MFRS 134? Interim Financial Reporting. MFRS 134 is the financial reporting standard that guides how companies prepare their interim financial report. It prescribes to minimum content as well as the recognition measurement and disclosure requirement needed to ensure that the information provided between the annual reporting period is both timely and reliable. An interim financial report simply refers to a financial report that covers a period shorter than a full financial year, depending on the company reporting practice of regulatory requirement. This report can issue semi-annually, quarterly, or even bi-monthly. Under MFRS 134, the interim report can be presented as either a complete set of financial statement or condensed set, as long as it is to provide meaningful and relevant information to users. Overall, the purpose of MFRS 134 is to keep stakeholders informed about a company's performance and financial position throughout the year, not just a year-end.
Now, shifting focus to some of the notable events or transactions that have impacted the entities, Bank Islam Financial Report and the performance overall. First, the issuance of RM1 billion and RM250 million to senior Sukuk Murabahah and capital securities respectively bring a robust of entities' capital structure, at the same time fluctuating the financing costs. Secondly, interim dividends declaration made on 3rd December 2024 along with the payment on 10 January 2025 in the total of RM249.3 million, as well as the second interim dividends declaration for the financial year of 2024, resulting in the reduction of retained earning and shareholders' equity. Next, here's a number of interim reports from Malaysia airports. Those interim financial statements for the period ended 30 September 2024 have been prepared in accordance with the Malaysian Financial Reporting Standards MFRS 134 Interim Financial Reporting, required by Bursa Malaysia for all entities whose debt or equity securities are publicly traded to publish interim reports. Ensuring frequent updates for shareholders, The interim reports disclose current interim quarter ended 30 September 2024, that is comparative with the same period in 2023. The year-over-year performance is evaluated through current financial period from 1st January 2024 until 30 September 2024, with the comparative period of the end of the immediate preceding year, which is financial year of 2023.